Good day, traders. I trust you are well. Welcome to Price Action Profits. A change in direction as far as this show is concerned. I'm going to start focusing on looking at the Asian Open and respectively, every market is active, right? From when the markets open during the Asian session, that's nearest to the international deadline. So the markets are opening New Zealand, Australia, Tokyo, Hang Seng, working, all the way back until the US markets open. So we can't look at every single thing in the time that we have. I'm going to be looking at uh, two indexes, Tokyo Stock Exchange, which opens, it just depends where you are listening to this one, but GMT +9, that's when Tokyo Stock Exchange opens, which is 2 a.m. my time, so I'm fast asleep. And, then the next market I'm going to be looking at is Hang Seng 50, which opens, my time, 3:30 a.m., still fast asleep, and that's 9:30 a.m. In Hong Kong. And I'm going to be looking at two currencies, New Zealand yen and Aussie yen. Just want to restrict all the activity to the markets that are actually open at that particular time. But you can trade any market. All markets have been traded. So you choose what you want to trade. And another thing in terms of the focus, I'm going to restrict myself to the morning session, Tokyo Exchange, 2.5 hours, and also Hang Seng Open, 2.5 hours. And of course, because Hang Seng is opening later than Tokyo, my reviews will finish when the Hang Seng morning session finishes. Only looking at four markets, trying to find some of the best trade ideas to share with. Now, when you are trading the open, it is completely different mindset to just trading throughout the day, which of course can include the open. But at the open, in my view, you are trading forces. Patterns haven't emerged fully yet for you to say, oh, this is that. They will emerge pretty quickly, but right from the open, there's just a lot of drama unfolding, bulls buying, of course, bears selling. Forces want to determine who's going to control the market, control that open, control the market for the rest of the day. And of course, more forces come in as more exchanges open throughout the day. When the European markets open, more forces come in, with the big exchanges open, German, France, UK, and then the US opens again, more forces come in. So bear that in mind. Anyway, for this first session, here's what we're looking at. This is New Zealand yen. And I just kind of marked out here, which like a marker in terms of when Tokyo opens. That's what I'm using as the opening index, the opening of the Asian session. Of course, you can see there is price action, right? Because markets are continually trading, but that's when it opens. And when I get down to this marker here, that's the end of the Hang Seng Open. And for price action profits from Asian Open, which is the new theme, new direction of this show, that's what I'll be looking at. Now, I haven't done, years ago, I did a course in trading the open. I haven't been doing that. I've been doing a course, best price action courses, best price action strategies, strategies that folded throughout the whole day. So this is fresh direction as you go along. Got to think through how this show will evolve into the next year, but just giving you a taste, a sample of what's coming. So here with the micro double bottom, okay, with no follow through. Why no follow through? Because after this micro double bottom, the bulls were strong. Want to see consecutive bull candles. Then we had a double top. That and that, that's a double top. Although we're looking at the open, the market is still open, right? That's a double top, but it's also a micro double top itself. And weak follow through immediately after that, weak follow through. And then we had a big bear breakout below the micro double bottom. Now, if you're trading forces at the open, this is a trade that you must take. You don't know what's going to happen, who is going to establish themselves, but for the first time, since the official open that we're looking at Tokyo, we now have some strength, two consecutive candles that you can sell and then decide where you put your stop, either a tight stop here, or a measured move stop. But then with the weak bear breakout, Okay, now what's happening? The bears managed to do this. Our camp is no follow through. Weak bear breakout. We still have George's EMA here, the 10 EMA. That I use instead of just drawing trend lines. That's all it is. Not much science to it, but that works for me quite well. You might have other EMAs. You look at it, fantastic. Use those. Weak bear breakout within here with a lower high double top. Bulls tried, failed, lower high double top, with another lower high here. Then we have another bear breakout below the lower high double top and below this. That became the new low of the session. So that breakout you can also buy. Okay, so two opportunities for you to have jumped in as far as this market. Again, stops, use a tight stop here or put a measured move. And then just manage your stops as you go along. So that would have been fantastic. New Zealand yen. This was an opportunity on Friday. Hang Seng, first candle. Now, I call this first candle trades. You have no other reference. If you want to wait for patterns to become clearer in my course, you got to wait a long time. But you're only trading the open, right? So, you got 2.5 hours. Got to take the trades. First candle trade, you can put your stop up here, or you can use a measured move stop because it can fail. Okay, why would I take this? Well, because huge bull candle at the open, some point was up there, was wow, fantastic. Whatever price action we had before the market actually opens, other traders are trading. That's all been erased. So the bulls are strong, might close above here and just keep going up, but we fail. Bears came back and closed right here, big candle. So because you trade in the open, you trade in forces, you take the trade. Okay, if it fails, you get out, take your loss. And that's boom. So you're in the pretty weak breakout. If you didn't take that, I guess you could also take that on the same premise that, maybe I should have taken that. So you could take that in no other reason. It's a weak breakout. So, it's not a breakout pullback low one is defining price action. But that you could have taken as well. So maybe I should have marked the first candle trade or second option, so you could have taken that. But if you've taken that, you're still using that same stop. You can't put a stop here, because your rationale for taking this after this weak breakout is at bear forces at the open. So happy to take that trade, and let's see how we go. Then we have a pretty decent enough breakout from that pullback, breakout, 3 consecutive candles. Bulls tried to reverse it, failed. So that's a breakout pullback lower that you can take. I would use a measured move stop of that, which would bring me up about here. That's a pretty reasonable stop. Never put, well, not being never put. You can, if you're scalping, of course, put a tight stop and see what happens. But I would use a measured move stop. But if you didn't take that after we break out beneath here, there's a breakout trade. You don't know all of this is going to happen. You're trading the open, you got to take the trades. Breakout trade, decide where to put your stop. That's probably reasonable to put your stop. If it comes out, you can get out here, minimal loss, and hold right up to the end of the morning session. That's where I would be getting out, purely trading in the open. All right, traders. So this is our first foray into focusing on trading the Asian Open, looking at those markets that I spoke about. And remember, we are trading forces. We try to determine the forces that are in the market and go with them. So we're going to be pretty smart, pretty alert to work with trading the open. All right, name is George Nyabadza. We'll catch up with you again next week. As I said, by the time we get to the end of the year, we'll have clarity about how this show is going to unfold. I don't trade it. I traded it for years and years and years. Made good money. But it just wasn't good for my health. And I live in a zone where life takes place. Life takes place, from like 6 a.m. to, like 6 p.m. But getting up every day, being in the market, and then still carrying on with normal life just became unsustainable. But I think it's fantastic if you live in on the eastern side of the globe, the Asian markets, huge opportunities for you to look into the market. And of course, all the other strategies unfold throughout the day, and you can pick that up in my best price actions.